Good morning, everyone. Welcome to today's market color, a London session of today's market color. It is so good to have everyone here around. Thank you all for joining on today's market color. As we always do, we'll recommend or request that you send and share the link on your various social media platforms. Please, I'll be giving us 30 seconds to kindly share the link on our various social media platforms. Share the good news of this market color. I'll be giving us 30 seconds for that, and then after that, we will be proceeding to the charts for today's analysis. Thank you so much as you do so. All right, welcome back to today's market color. Thank you for staying through and thank you for sharing the links as requested by us, right? So down to our monthly time frame for the dollar index, we can see that price is actually clearly bullish to the upside. But what did we see price doing? We saw price trading into this other block on the monthly time frame, and there's some sort of a reaction from that region, right? I expected to see that there was going to be some sort of reaction when price trades into this fair value gap on our monthly time frame. We saw that price actually tapped into the fair value gap, forming another block, trading back into that other block and reacting from that region on our monthly time frame. And for our weekly time frame, we can also see that price is bullish to the upside, right? I'm just going to draw my fib from point A to point B, right? So what did we see price doing? We saw price trading to the upside, right? Breaking this high on our weekly time frame. And after every expansion, we would like to see a retracement. And we did see price retracing into this other block on our weekly time frame, right? Price retraced rather into this other block, and we are seeing some sort of a reaction from that region on our weekly time frame. And for our daily time frame, it is also bullish. And I like to draw my fib on the most recent swing, right? We're seeing that price is clearly bullish. Price actually retraced into 61.8% fib level on our daily time frame, and there's some sort of reaction from that region to the upside. Although price is not moving to the upside with so much momentum, but there is a bit of a reaction from that region to the upside on our daily time frame. And for our 4-hour time frame, right? We'll just wait for our charts to load. Taking a bit of a time. All right, so for our 4-hour time frame, price, the major trend is to the upside. And this corrective trend to the downside is kind of showing us some formation of lower highs and lower lows. But what we're seeing here is price retracing into this other block on the 4-hour time frame. So I will keep being interested in selling dollar when I see price taking out this low here, this low here on our 4-hour time frame. Or I will be confident in continuing my overall trend of a buy when I see price taking out this high on our 4-hour time frame. So I am actually bullish on the dollar, but if price breaks lower, taking out this low, then I'll change my bias to a sell on the dollar for our 4-hour time frame. And for our 1-hour time frame too, we can actually see that the overall trend is bullish, but the corrective trend to the downside is actually bearish. And what are we seeing here? It looks like some sort of a retracement into this other block here for price to continue its move to the upside. Like I said on the 4-hour time frame, I'd like to keep buying the dollar, except if I see price breaking that low on our 4-hour time frame. And I'll keep buying and hold on to my buy when I see that high on our 4-hour broken to the upside and a pullback to support my buy buyers on the dollar. Right, for Euro USD, on our monthly time frame, we can see that price is actually bearish to the downside, forming lower lows and lower highs on our monthly time frame. And for our weekly time frame, what are we seeing on our weekly time frame? Price is also bearish, right? Price retraced into 78.6% fib level and reacted to the downside. It traded to 61.8% fib level and reacted to the downside, taking out this low. What are we seeing at this moment is a retracement for price to keep selling to the downside on our weekly time frame. And for our daily time frame, right, it's also very bearish. I'm just going to plot my fib on the most recent swing on our daily time frame. And what are we seeing? We're seeing that price actually retraced into 78.6% fib level, which is a very strong point for price to react from, right? So any moment from this fib level, we are expecting a sell to the downside on our daily time frame. And for our 4-hour time frame, the major trend is to the downside. And then our minor trend, which is the corrective leg, is to the upside, forming higher highs and higher lows. From our higher time frames, we established that we wanted to sell the Euro USD, but we will be confident enough to take the sell when price actually takes out this low on 4-hour time frame. When price takes out the low and retraces, then we'd look out for our entry signature to take the sell. But before that happens, we're just going to sit and watch what the market does before taking any move whatsoever. If price doesn't take out this low, then any retracement you see, you can actually keep buying the Euro USD. But I have a sell bias for the Euro USD on across board rather. So down to GU. On our monthly time frame, we can actually see that price is bearish, very obvious. And on our weekly time frame, what are we seeing? Price is also bearish, right? Price is bearish. Price has taken out this low on our weekly time frame. And after every expansion is a retracement. So price expanded, taking out this low and retraced into 61.8% fib level. Price is currently at 61.8% fib level on our weekly time frame. And for our daily time frame, the overall trend is to the downside, right? Breaking lower. I'm just going to plot my fib here. And as you can see, price retraced all the way into 78.6% fib level, coinciding with this other block on our daily time frame. So we are expecting that price should react off this point. And where do we see price going to? There's an IOFED here, a fair value gap to your right and to the left, rather, to the left and to the right. So I expect that price should react off this level that it is right now. And I will be interested in taking my profit when I see price trade into this IOFED and eventually take out this low. So my first point of profit taking is when I see price trading into this IOFED on our daily time frame. So price is actually at this other block, which is a good place for price to react on our daily time frame. And for our 4-hour time frame, what do we see price doing? The overall trend is to the downside, and the corrective trend, which is a minor trend, a minor structure, is actually to the upside, right? As we can see, a corrective move is to the upside, forming higher highs and higher lows. Of course, we had a sell bias from our higher time frames, but I'd like to take the sell on GU on our 4-hour time frame when I see price taking out this low on our 4-hour time frame. So I'll keep my fingers crossed and not take the sell until I see a clear break of this low and a retest before I go down to my 1-hour time frame and look out for my base after price has actually taken out the low on our 4-hour time frame. So I'd like to show us something, right? So I was in GU buy from last week. Yes, you heard me right. From last week, Thursday. And what did I see? I saw a base forming here, a base and a continuation. After sighting the base and putting my arrow on the wick of the buy handle, I went down to my 5-minute time frame and I sought out for a bullish variation. Of course, my stop loss was below this low here, because if you are trading the base strategy, you'd want your stop loss to be below the base and not in between the base. If my stop loss was in between the base, I would have been taken out. So I was in the trade for so long, but then CPI news came out for the pound. Across board, the pound strengthened and I took profit this morning, right? So until I see a clear break of structure, I won't be interested in selling GU until there's a clear break of structure to the downside, taking out the low on a 4-hour time frame. If that doesn't happen, any retracement I see and my entry signature, I will. So the sell is only confirmed when there's a break of the low on our 4-hour time frame, right? So that will be the end of my session. We'll be going on a brief break, and after the break, we'll be seeing CJ before us analyzing the gold and iron baskets, right? That will be the end for now. See you during the New York session, where we'll be having a recap of what played out during the London session. Thank you so much for having me.
Good morning, everyone. Welcome back. This is the market color for today, the 22nd of May 2024. I'm excited to have everyone here on board. Straight away, we're going to be looking at the analysis on gold, and then we're going to be taking an analysis on the yen basket before we proceed. Okay, so let's go right into it. Now, starting off with the analysis on gold, we saw, like we said a few days ago, that the gold has created a new all-time high. Okay, so we're looking forward to places where gold is going to retrace into so that we would have clear direction on gold. So having created an all-time high, what we usually want to look out for is buy side imbalance, sell side inefficiencies, okay? So that is what we are looking out for. That's what we're looking out for on gold. Okay, so let's go straight into the 1 hour chart. All right. So looking at gold on the 4 hour chart rather, we want to see the inefficiencies that were created during this period where price was going ahead to form the new all-time high of gold. By the way, the price point is 2,451. All right, you can round it up as 2,450 for gold. Okay, so we want to see all the imbalances that were created on its way up. Now you can see there was an unmitigated order block right here, so you can mark that out, because all these levels would form our bias for gold when we're looking forward to the retracement. It's going to give us good point of interest to take off our sell positions from gold. If you recall, since on Monday, we told you guys that we're looking to continue shorting gold to the downside. Of course, during the period, there were missed entries, and during the period, there were also entries that we were able to take advantage of. But however, let's look forward to the future. Now we're seeing that gold is now giving minor structure to the downside. We know this is a retracement, because for us to now conclude that gold has changed its trend to a sell, as usual, we would want to see at least a 4 hour break of structure, if not a daily break of structure. And this is the level where we would want to see price break, because the last bullish structure is from this swing low to this swing high. This is the last obvious and complete structure. So for price to change structure, we need to see price close below this level right here. Okay, now the next thing we'd want to look out for here is this unmitigated mitigation block right here. Price has not returned to it yet, so we can look at it here as a point of interest for selling off gold, because we know clearly gold is going to sell, but where is it selling to? This is what we are interested in. All right, so we are looking at this unmitigated block right here, and then we know for sure that there is also a fair value gap and an old high. So this is another level where I'm expecting gold to retrace to. Then of course we're going to add good old Fibonacci retracement to, so that we'll be able to gauge premium and discount levels in the chart. Currently price is already at equilibrium. We need to see it further at discount, because if you check at discount level, we have our 61.8, which is coinciding with this old order block, old mitigation block right here, and then the old high. And that is going to form a good bias for selling gold further into the week. All right, so looking at all these places and all these imbalances that have been created, this, my dear people, are the levels where I want to see gold retrace into. So what I'm going to be doing is to keep shorting gold until it gets into either of these points of interest. Currently price is struggling around 61.8, around 50 equilibrium level. It has not broken through, but then I'm also seeing this buy side imbalance, sell side inefficiency around here. So I'm suspecting that price is going to at least come to mitigate it. If not mitigating the whole level, there's also an order block right here, at least this order block here. Price should at least revisit it. Okay, so this is where I want to see gold retrace into going into this week. All right, so I'll keep selling gold once I see my entry signature. So far, it has only printed clearly just once. That was on Monday. Yesterday was not so clear. We'll be waiting to see today. Yeah, yesterday sold. A lot of people made money from it, but however, strategies differ, and that is what is going to keep you long in the market, when you're able to follow your strategy through and through. Okay, so for today, we're looking out for a good setup to sell it further into the downside. Now let's look at the minute time frame to see what we're going to be getting out of it. Now for the minute time frame, using our box structure, which has favored us so much in this market color since inception, we want to see various places where gold would want to sell from. One of the levels is here. All right, you can see the box structure. The left shoulder is right here. And then there is a sweep to the upside, break of structure to the downside, and then we're expecting possibly a return to this place. Now, if you can see this same level, one thing I like doing when I'm using the box structure is that I like to look for points of interest like fair value gaps, other blocks around this left shoulder that coincides with this swing. Right here, you can see that there's a fair value gap to the left, a fair value gap to the right. Let me highlight that quickly. You can see this point right here is a very important point of interest if this price point, if this structure is going to be obeyed, if the box structure is going to be obeyed, this is going to be a very important point to take note of. Price may trade into this place if it's not going to trade all the way up here. Okay, so I'm looking out for a sell of gold when price comes back into this place. If this place becomes violated, we can also refer to this other box structure right here. So we've seen that there's two box structures, one to the upside, one to the downside. So you'll be asking and be wondering, because I know you guys are going to ask this question, which one are we going to follow? Which one are we going to use? Well, the answer to that question only lies in the future. Until price has played out, then you're going to know which one is going to actually play out the box structure. So what I'm going to be doing is that I'm going to be taking my first shot right here, because whenever we are bringing out any strategy or any structure that you should follow, we're also making rooms or accommodations for the periods where it doesn't go in our direction. Okay, so if you now have a 70-30 win rate, that means you're making accommodation for 30% loss, 70% win. All right, which is something very similar to what the box pattern has already been showing us in the past couple of weeks. Now, if I take my first shot around here, let's see how much that is going to be. This is about 30 to 40 pips on gold. This is quite decent if you're risking 40 pips on gold. It's quite decent because 40 pips on gold is like risking 20 pips on GBP USD. All right, and maybe let's say 15 pips on Euro USD. So this 40 pips is quite decent compared to what you stand to gain if price moves in your direction. You're looking at same price somewhere around here. This is about 140 pips, 30 pips for 140 pips. That is almost 1:4.5. All right, so it's a good trade if it goes our direction. So once price comes into this place, I'll be willing to take my shot into the downside. If the speed at which price approaches here is not the kind that I would like, then I will be waiting for confirmatory entries so that if I see the confirmatory entry printing around here, then I'll sell it. If not, once price taps into this place, I'll sell and put my stop loss here, right? So I've said two things. I'll either wait for confirmation around this point of interest, or I'll take my sell right away. Now, if this one doesn't hold, then I'll be trading all the way into this other box structure above. So let's look at it on 5 minutes and see if there's any important thing we need to note. All right, so on the 5 minutes time frame for this guy, you can see this small tiny order block right here. So this one could also hold price. All right, so I'm very much interested in this guy, this point of interest right here. And then if you look to the downside, you're also seeing multiple lows. There's a seemingly equal lows around this area, but I would not want to trade all the way here. Instead, I'll be taking my profit right here. All right, the reason is because from what I've seen and experienced in gold, many times gold is shy. Whenever it comes to TP, it's shy. But when it comes to hitting your stop loss, he's as brave as the lion. All right, so I would want to take my TP quite early, somewhere around here, before price now trades to the downside. Then for the other box structure above, you can see that on the 5 minutes time frame, there is an old high right here just before the box structure. So this could also engineer liquidity to be taken. Once liquidity has been taken right here, price may now trade into this level and then start falling to the downside. So if that happens, that will be a good place to take my trades from. All right, and then I would sell gold for the remaining parts of today. But my overall bias for gold is to sell it into these two levels right here, around 2395 region and 238 region. All right, so this is my bias on gold for today. I know you guys are already having questions. After the analysis, we're going to be attending to your questions immediately. Now let's take a look at the yen basket. It has been an interesting time trading the yen, all right, and we've seen a lot of things happen during this period. So we're going to be analyzing the yen right away, and then we're starting off with the daily time frame. We're looking at the daily, and we expect that because of the body language of the Japanese central bank and the Ministry of Finance, we're seeing that the yen basket could further sell to the downside and even possibly take out this low. But first, we're expecting a reaction of this level right here, this 5743 region. And you can see that reaction already took place on Monday. Not really. I don't think price has gotten there yet. Yes, price hasn't gotten there. Sorry, that arrow kind of confused me. So we're expecting that price is going to come into this region and then give us a reaction. So we're still waiting on price to get to this region. Some of you will be wondering what that region implies or what is around that region. Let's take a look at the 4-hour and then the 1-hour time frame so that we're clear on it. Now, looking at the 4-hour time frame, you can still see structure of the yen, even though it gave this deep reversal, is still to the downside. All right. All these reversals you've been seeing since April 29th, May 1st, yeah, I think May 1st and the likes, they are just interventions and speculations from investors and also retail traders as to where the yen is going to go. However, in the long run, we're seeing that there is no stimulation for the yen to trade further upwards. So we may see the yen selling further downwards in coming weeks. Now let's take a look at the 1-hour time frame to have precise points of entries for our various trades. Now, the 1-hour time frame, we marked this huge order block right here. Not order block now, fair value gap. Okay, we did that to all the yen pairs and also the yen basket. So this is a huge fair value gap right here from here to here. And then we marked 50% of that fair value gap, which is what we call consequent encroachment. This is it. 50%. So let's change the line color so that we can distinguish it from the others. All right, so this is the consequent encroachment. We've been waiting for the yen basket to trade into that level. Seeing how large the fair value gap is, we may not see price consuming the whole of it completely. So since on Monday, we've been telling you guys that we're going to keep shorting the yen until price trades into this blue line right here. We even marked it with a rectangle, and the blue line is sitting right at the top of that rectangle, right? So you can see this is where we're expecting the yen basket to trade to this level, 5840 region, 5841 rather. 5841 is our expectation for the yen basket. So we expect to see it sell all the way to this level. So with this, we have now been bullish on GBP USD, sorry, GBP JPY and Euro GBP, and somehow also on Euro USD JPY. Now on GBP JPY, we marked this level as our point of interest for the yen buy all the way from Thursday last week. We marked it when we saw the deep retracement. We were expecting price to come out and fill up this fair value gap. Okay, seeing that the yen basket has not filled up its own, we're expecting GBP JPY to fill up its own. All right, so we were still bullish on the yen basket, on GBP JPY rather. And you can see how that sold on Monday when price got to 50% of the fair value gap. I was expecting a sell. All right, so I took a sell around here. Then price sold a little, but then went against my entry. But then I went to find out why, and then I saw that the yen basket has not traded into, even if it's at least 50% of its own fair value gap, which is going to give more room for GBP JPY to sell. And that day, I think on Monday, we changed our bias, and we also informed you in the New York market color session that we're changing our bias for GBP JPY to a buy. So we've been buying GBP JPY. You can see how it has also traded all the way to this to fill up the fair value gap. Now that the fair value gap has been filled, I would want to keep my fingers crossed, I think, and then wait for the yen basket to do its thing, because GBP JPY has filled up this guy. Some other yen related pairs has not done that. So GBP JPY after this may stall. You heard from Cynthia in the morning, the CPI for GBP for the Great Britain came out this morning, and it was quite decent. Inflation is being tamed in Great Britain, so we're seeing that as a positive news for the Great British pound. And across board, all GBP related pairs have been trading to the upside. All right, so this is for GBP JPY. If you missed out on the buy, you can now wait for the sell. I didn't say you should take the sell, I said you should wait for the sell. So we'll be looking out for GBP JPY to start breaking structure to the downside. All right, this is one of the places I want to see GBP JPY break, and then this is the second place I want to see it break, so that I would sell it temporarily to fill up all the liquidity and imbalances that it has left while trading to the upside. Okay, so this is what I want to see on GBP JPY. A break of this structure, then I'll be willing to sell it all the way down here and then possibly to this place. But first, let's see the breakout structure before we start knowing where we are going to be headed. All right, so that is that for GBP JPY. For the dollar, we have similar case for the dollar, not so similar rather. Euro JPY is what has a similar case compared to the dollar. Now for the dollar, we are still stuck within this large range. One of the things that makes me not comfortable trading Euro JPY in this kind of period is that you start seeing movements like this, but we've explained that in previous weeks. Now, looking at what we have on USD JPY currently, what we're seeing in this whole buys for Euro JPY, it's not a sign of a dollar strength, it's a sign of yen weakness. That is what we're seeing, all these buys on Euro JPY. Now, I'm expecting that Euro JPY, I saw a play that could happen on USD JPY rather. This is the fair value gap, as large as it is, and then this is 50% of it. Price came very close to 50% of that fair value gap, and then started selling downward. So I'm suspecting and anticipating price of USD JPY to trade into this place, so that this becomes an inducement that has been created, and then price comes back to grab all the stop losses around here, then trades into this level. So with this, I'm bullish on USD JPY. I would want to trade it all the way to this upside. Okay, so what I'm waiting for this morning is to possibly see a retracement. One showed up, but around 6 a.m., but it was not as deep as I wanted it to be. Right, so if I see a deep retracement on USD JPY, I'll be willing to buy it all the way to this upside. Okay, this is quite decent, 170 pips. Not something you would want to miss if price is going in our direction. Okay, so for USD JPY today, you can wait for a pullback, and then we'll be willing to go long on USD JPY all the way to the level that we've marked above. Okay, so far the price action has been sluggish, but if you're able to spot any entry, then good for you. You can take advantage of it. One of the places that I was also expecting USD JPY to sell to is this level right here on the 15 minutes time frame. Okay, because pairs like this that move very rapidly when they want to move, you can also use 15 minutes time frame to find out a box structure around it. All right, so I'm seeing something like this. There's a liquidity point right here, just an old low before the box pattern. So I may be expecting USD JPY, if possible, to drop down to this place after taking out this high. All right, if price takes out this high, if I see a drop of USD JPY to this place, then I'll be taking my buy on USD JPY all the way to this level that I've highlighted here. Okay, so this is my analysis on USD JPY, and if it plays out, I hope you all will be able to take advantage of it. And then finally, Euro JPY, very similar thing to what we analyzed on GBP JPY. Euro JPY has also got into our point of interest. If possible, like GBP JPY, it may go ahead to fill up the other block because it has already filled 50% of the fair value gap. All right, and we're not seeing any signs of it stopping yet. So we may run Euro JPY all the way to the upside. Okay, so if we extend this 50% level, we'll see that price has already filled it. All right, when price filled it somewhere around Monday, if I'm not mistaken. Yeah, somewhere around Monday. This is Monday. It sold off a little bit, but that sell didn't really hold. So we may see it fill up the whole fair value gap, just like GBP JPY has done. So GBP JPY has given us a clue on what may possibly happen in the market. Since it has gotten there, we're expecting it to now stall a bit or consolidate a bit, so that Euro JPY and the likes will be able to catch up with that move. So I'm willing to take that risk to long Euro JPY all the way to this region right here. Okay, I know it's almost close, but then when you calculate it risk reward wise, you see that it's going to be quite a decent trade to take, about 80 pips for day trading. That is quite decent. So on Euro JPY, I'll be waiting to see price give me some retracement. I've been waiting for that retracement to happen, maybe a clear of Asian low. All right, when price clears that, I'll be looking to long Euro JPY to the region that I've marked above. So I'm just waiting, if possibly, to see a sweep of the low of Asia, and then I would long Euro JPY to the upside. All right, this, my dear people, is my view on the currency pairs that we've analyzed. Right about now, we're going to be taking commentary questions. and answers from you guys. Okay, so the first question I have from Fumbi says, sir, okay, let's do the sir first. Please, which confirmation are you waiting to see on XAU USD in 15 minutes time frame? Now, this is your question. It's very tricky because the confirmation I'm expecting to see, we only teach it to our FX bootcamp students. So I'm going to be doing them a disfavor if I start sharing what they paid me to share to them on this free session, okay? So I've given you all the insights that you need, and I don't think that I left anything apart from this stone unturned. So please just respect the decision not to go further into sharing that, all right? Because our paid students already have access to that. We will not want to cheat them by sharing it, okay? So if you want to get access to it, of course, you know what to do. At this stage, I shouldn't be telling you, but I'll still tell you, sign up for the FX Bootcamp. All right, so Fumbi, I hope you understand us and you understand our perspective on your question. Now, the next question from Obialo Wisdom says, you guys have an online class for beginners. Yes, we have an online class for beginners, and it's already starting today. All right, but then you can sign up whenever you want to, and we have an online library where all the videos are stored. You can watch the videos, the pre-recorded videos, and then you can join the live class. The name of the course is ATM Cash Flow. The course breaks down everything about Forex trading from the very beginning to an intermediate level. And then it doesn't just rush you into the Forex market. It takes time to build your knowledge bank till you are now consistently profitable. Then you can move to the Forex market. And what we used to do that is allowing you to trade on synthetic indices where you don't need to be concerned about a lot of fundamentals. But as at the time you are now prepared, you can now switch over to Forex trading, because we have a Forex class in it, we have a synthetics class in it. But then the course is tailored to build anybody, I mean anybody from a beginner phase to an intermediate phase in trading. So please, if you want to, Mr. Obialo Wisdom, you can send us a DM to our WhatsApp number 081 60 99 50 30. It's going to be dropped in the chat box, but I'll take it again. 081 60 99 50 30. Send us a message now and we'll get you started. All right, you especially, Mr. Obialo, I'm looking forward to having you in our beginner class so that we'll be able to write the course together. Now, the next question says, I noticed that you have more chances of taking a sell in GJ while you are looking at more buy on EJ and USDJPY, because GJ has filled the fair value gap. Now, yeah, that is true. Sometimes when we're analyzing pairs that are correlated, when we're analyzing correlated assets, one gets to the point of interest before the others. So it gives us a hint on what the others are going to do. Now, since GBPJPY has gotten to the point of interest where we want to sell it from, and USDJPY and EuroJPY has not, one thing that is common to happen is that GBPJPY will start consolidating. By consolidating, I mean it's going to start ranging around that region. And when the others has caught up with where GBPJPY is, all of them will start moving in tandem. I mean, they're going to start moving together. All right? It's just like saying you're driving in a convoy, and I like G-Wagon, so I'll be in front with my black G-Wagon. You are in the back with your red one. And I got to our destination before you. We are supposed to reverse afterwards, but then since you're not there, I would wait for you. Since we're in convoy, I'll wait for you to get there. That means I'm consolidating. When you now finally get there, you now reverse and then start going in the new direction. I hope that makes sense to you. All right, so since that there is no further questions, we're going to be taking commentary from our boss. Good morning, sir.
Good morning, CJ. Thank you for a very concise presentation this morning. Good morning to all those who are online. Some of our regulars, thank you so much for showing up. Oluwaseyi, some of our regulars that will always be here. Thank you so much. Thank you so much. Okay. Del PC and some other people, thank you. I don't think there's much to say with regard to the commentary. For me, I'm still waiting to see the dollar pick a particular direction. If you see FinVis FinVis, most of what we've been seeing is the dollar refusing to pick a particular direction. Let's see FinVis. Yes, on the, can see dollar right smack in the middle. Let's see weekly. Because what we are seeing, we have been seeing higher highs on assets like US.
Sorry, I think his line is breaking due to
Can you hear me?
Oh, he's back. Yeah, we can hear you, sir.
Okay. All right. So I was saying that we are yet to see very clear direction on dollar pairs. What I mean by dollar pairs are USD, CHF, USD, JPY. We have not seen them clearly define their lows. It's been tricky. If you see USD, CHF, if you see USD, CHF, it has refused to form its own lower low. If you see USD, JPY, it has refused to form its own lower low also. But you've seen the other pairs, Euro, USD, exactly, USD, CHF, okay, yes. You see it on the daily or any of the higher time frames, you see what we're talking about. It has refused to form its lower low. It just tapped and then created equal lows. We even have 4 points now, 4 good touches. 1, 2, 3, 4, and a fair value gap beneath. See the diagonal liquidity? Diagonal liquidity right there. Then horizontal liquidity equal lows. That's quadruple bottoms, 4 of them. Then fair value, look at the diagonal liquidity. Diagonal liquidity, yes, you can mark that. Leading into a fair value gap. Leading into a fair value gap. So they are just, and all of that is within the space of 100 pips. Within the space of 100 pips. But if you see, and it has not come to tap into that, but if you see Euro USD, you see Euro USD, we see Euro USD form higher highs. As it there, it has cleared its own high. And then GBP USD has formed even higher highs. Today, the pound is on a roll, is ripping. Pound is ripping. So it has cleared its own highs to the upside. So all of this is just making me watch the levels of manipulation in the market on the dollar. Is quite interesting to see. So I'm waiting to see all of that clear out so that one can have much clearer biases in terms of sentiment. But as it is, it's still clear that the yen overall is weak and their monetary policy has not been able to change that. It's still clear that gold and indeed all precious metals, industrial metals are on their way up. So all in all, I don't have any, I support your analysis because sentiment is not so clear right now. And the levels that you guys have marked, fantastic. I want to use this opportunity again to remind us that please let's be at the Traders Bootcamp Abuja. Millions of naira. We're spending millions of nairas just to make sure that it's an excellent event, and we're offering it free. 5 free sessions, 1 paid session. We're going to be talking on things people hardly talk about, things like bots. We're going to be talking on things like investor relations. We're going to be talking on things like structure. We're going to be taking live trades. You can ask questions. We're going to be associating and relating and interacting with fellow traders like yourself. It's a fantastic event. Even if you are totally new, you can come and see and say, oh, is this industry something I want to be part of? I want to incorporate this into my financial vehicles for financial freedom. And you're going to get a chance to meet all the facilitators in person who show up every day and to interact with them. So once again, those of you who are applying for the paid session, there's 1 paid session out of 6. Remaining 5 are free. Take advantage of the discount. Once we get close to the date, the discount will be off because that will be late bird. All right. Those of you who will not be able to come to Abuja, will be given the opportunity online. We will do market color online, the live market color, the way we always do it. On those 2 days, it will be online. But for every other one, I can't promise yet. All right, because we're sacrificing so much to be there. So we expect people to also try and make those sacrifices. But market color sessions, 2 sessions will be aired online, guaranteed. All right. Thank you very much. Over to you, CJ. Thank you very much. Not much to say today. Cheers. God bless. You wanted to ask if we have something for those of you who will not be able to afford. We have 5 free sessions. 5 free sessions. We have 5 free sessions. That's what we have. 5. All right. Those who bought the Forex Bootcamp, well, in as much as you bought the Forex Bootcamp, that's a separate ongoing package, different from the physical class. So, and then if you're in the Forex Bootcamp, any question you want to ask, you ask there and you receive answers, okay? The only thing you miss out on are some of the immediate interactions that will be happening there, the chance to interact with other traders like yourself, and also maybe the trading bot that will be given for free to some of the people who do the paid session, all right? So that's basically all that you will miss. But every other thing, you will have access to it, and you can ask questions with your instructors right there in the Forex Bootcamp, and you receive answers. Thank you very much. We're trying our best to make it as easy as possible and affordable as possible for everyone, but at the same time, we can't go beyond certain levels. All right, then. God bless you.
All right. Thank you very much, sir, for your wonderful commentary as always. And we advise everyone to trade cautiously, apply proper risk management, and keep your psychology always in check. If you have any questions, you have your various Telegram groups and channels where you can ask your questions, and we'll do well to make sure we attend to your questions. All right. Without further ado, we're going to be seeing at the New York session of the market color. Remember to sign up with any of our products that you're interested in, as most of the prices are fairly made available to you until we meet again by 3 p.m. Wish you good luck and good trading. Cheers and God bless, guys.